Yes, we're back after a day of a break. And while we were away, yes, you had the Wall Street that were digesting the big tech earnings and delivered eighth straight session of gains. When you talk about the U.S. markets, Dow and S&P 500, both of them logging in eighth day of fresh gains coming in. It is the longest gaining streak coming in for Dow, at least in a year, and the longest for S&P 500 since August. You have tech earnings, so you name it, and they've all come out with their earnings. Microsoft, Meta, Apple, Amazon. While you had Amazon and Apple that came up with their earnings post the closing bell for the US markets, you had Meta as well as Microsoft that posted a great set of numbers, enthused the street, and on back of that, briefly you had Microsoft that was above Apple, and it actually touted Apple to become the world's valuable company. That is only a wee bit. But Nikunj, we are back after a day of break. Healthy set of up move coming in for the US markets. No doubt the eco data is not that encouraging when you talk about the US markets.
See, there are a lot of moving parts right now, and frankly, you cannot look at the US market. You'll have to look at US markets independently of what the price action is. US markets, in a sense, I think are what could be called as they are in this rebound mode. They've extremely oversold, but now everyone is clearly of the view that going forward, things will not get better, but they would be better than what the assumptions were when the real tariff announcements were at play. Nasdaq has knocked off all the Liberation Day losses. The fear that inflation will come back, bond yields will spike, that will have a huge impact in terms of the US economy and the trade orientation, that clearly seems to be taking a backseat. So what are we working with? Well, we are working with a set of global cues which are favorable. We are working with a set of global cues where China, which was supposed to make a comeback, that has not made a comeback. We are working with cues which in a sense are also indicating that in the near term, the volatility in the market, which was daunting and haunting, that really seems to be taking a backseat. But US markets, I think, are having a less and perhaps and it is really having a minimal impact on how the trade setup in India is moving. So that's the point which I really want to move out. While you want to mark US markets, you want to acknowledge them, you want to analyze them, but you do not want to use them as a true blue benchmark to judge what India will do and what will happen to your trade orientation.
All right, so that's about the global markets, but back home, the D Street, the month of April was actually very good. Why so? Because the Nifty has seen to be hitting its 2025 highs for itself. The mid-cap index was sitting at a 3-month high in the month gone by. And Nikunj, the FI has actually turned net buyers in the cash segment. That's one of the other cues that we have been tracking. But where is India headed? What are the cues that we are getting?
Okay, the question to ask is perhaps in the month of May, do you sell and do you go away? Right, and how will May be different from April? Now, April was nothing short of a month of dreams. Dreams, why? Because the linear rally, what we've seen in the market, it is just more than a breath of fresh air. Who would have thought that we would be anywhere close to these levels of 24,000 on the Nifty? Forget 24,000, even 23,500. But the reality is that we've seen almost a 12% uptick from the recent low, 7%, almost a 6% uptick in absolute terms. The Bank Nifty has also had record gains, and mid and small cap stocks also have participated quite brilliantly. Now, what did the trick for us in the month of April? I think it was a bit of a macro, but a lot of flows. Bit of a macro, why? Because crude came down, dollar index came down, that on the margin helped us. But the real underlying factor which made all the difference was this grand comeback by foreign institutional investors. Suddenly in the month of April, you had no supply, only buying, no selling by institutional investors, and a bout of short covering by HNI crowd. Now that kind of a setup is unlikely to continue. So what I'm perhaps, if I have to sketch some points here, how will May be different from April? Number one, this April was about short covering and liquidity. May not be all about this gangbuster rally or gangbuster comeback by foreign institutional investors. B, you also have to reconcile the fact that earnings season has not been a wow one, which means that somewhere markets will be cognizant of the fact that while stock prices have gone up, earnings have not caught up. C, the IPO, which was the missing link in the month of April, that has started. Ether is already on. I think PNB Housing block deal is coming. Then Axis Bank is looking at QIP. We also understand that several DRHPs have been filed, and then it's a matter of time that that entire flywheel effect will start kicking in. So May would be dramatically different because of levels, stretch in terms of some select names in terms of earnings, IPO which could be in liquidity, liquidity negative event, and then in general this kind of an FI comeback is unlikely to continue, because if the mother market, which is the US market, if that continues to do well, then obviously the whole charm of moving to emerging markets in the short term, it gets defeated.
But then, Nikunj, let's also take into cognizance the fact that this entire tariff tantrums that you have from Trump, that has also actually kind of dwindled the faith of foreign investors when you talk about the US markets. There are a lot of analysts who are now talking how the flows are actually shifting out of US, and India being the preferred one in the EM basket and Japan being the preferred one in DM basket. That is what the foreign
See, that's a long-term trend. And
okay.
that's a trend which I think is a multi-year and a multi-decade trend,
okay.
which is that in this year, money will continue to move out of from developed market. And I think just like in last 5 years or last 10 years after Prime Minister Modi got elected in 2014, India has become like the go-to place if you want to invest in terms of corporate governance, good growth, and a turnaround in the economy. So India has been this 10, 12 year kind of a go-to space for investors. Just like SIP investors have come back, that's a multi-year trend. So this is a multi-year trend that money will move out of emerging markets. Progressively, US economy will continue to contract, or it will continue to disappoint. We are only talking about month of May. When we are analyzing the month of May, we are looking at other factors. What else is there on the table? Roaring comeback by FIs, extreme oversold conditions in crude, dollar index which is below 100, earnings which have not warranted big upgrades, and March and cyclicality which always happens in the month of May. So my limited point is that you cannot extrapolate the April rally into May. Right. Don't have leverage positions. I'm the same guy who said in the month of March you have to lever up. But that's the market. See, levels, prices and events, they drive what you do in the short term. So in the short term, I'm a big believer in what is called as risk-reward ratio. The risk-reward ratio in the month of May perhaps is not in favor of chasing stocks now. If you miss the bus in the month of April, wait for the next bus rather than jumping on the bus midway. Wait, next bus will come. That's how markets move. But the train has left the station for bargains. Now you will have to wait for the next train. In fact, now you should be looking at getting out before the train stops. So right now, if you are in the market, look at getting out ahead of the dead end. And then you wait for the new train to come if you really want to invest now. Now, if you are running in the market and jumping on a bandwagon, then maybe you have a risk of slipping.
Nikunj, I'm sorry, I'm just stretching that point a bit. In the month of April, I think every one of us was busy tracking the Trump's commentary on tariff. But for the month of May, what as per you will be the key data points to watch out for which could actually drive the market?
China.
The China.
So the China negotiations have to start. And if the China negotiations don't start, then we really have a problem. See, for other markets, so what will happen? I think India, you will actually see in the month of May a lot of trade deals. As more and more trade deals will happen before that 90-day window, you actually will see markets' nervousness will start getting more and more tempered. So when the market knows what is moving, then the uncertainty goes down. If uncertainty goes down, crude prices will start coming down, commodity prices will start moving up. But markets have already priced in that the trade deals, equity market have already priced in that the trade deals would be better. So that also would be at play. Apart from that, a lot of holidays, month of May, I mean a lot of holidays not from market.
Yeah, a lot of holidays.
But a lot of holidays, a lot of vacations. April was all about holiday, too many holidays, spoils you. Then you then May comes and reminds you that you have to work hard. Yeah. So that is a big difference which will happen.
Absolutely, that's the big difference that will happen in the month of May. Watch out for those vacations as well. But let's talk about the high frequency data that we've been getting, given the fact that we are in brand new month, the month of May, which means that we will get all the production data, the sales data for the companies for the month of April. And you have the auto sales data that have come out. But before that, the GST data. What a mop-up. Record numbers coming in for the GST data for the month of April. We've surpassed that 2.37 lakh crore rupees mark when you talk about the GST collections. Remember, for a while, you had the GST collections actually dwindle a bit and then trying to stabilize. But right now, as you can see, record levels coming in for GST numbers. And while on the other hand, you have the auto sales numbers also that have come in. And if you look at the numbers, you had Mahindra tractor sales as well as Royal Enfield sales coming in line with the estimates. While if you look at the below set of numbers, you have Escorts, Tata Motors has not performed well, Hero MotoCorp has not performed well in the month of April, while you have Eicher Motors VECV, that is the commercial vehicle segment, the TVS Motor numbers, Maruti, as well as M&M's auto segment. They have actually performed well when you talk about the month of April. But Nikunj, how should one read into these high frequency data, because they really matter? They actually tell you which side the puck is moving right now.
See, March and April are always tricky one to call. March because the so-called sugar rush which happens before the year end, which actually kicks in. But April has been unusually strong given the high base what we right now have. So, directionally the number is moving higher. Why? Because the economy is growing. But what is important here is that the base effect for the GST data is not kicking in. I mean, you have a GST mop-up collection which actually is higher than the nominal GDP. And that is very, very encouraging. And April, in a sense, is not something where you would have expected or anticipated something very large or something very magnus opus, largely because April was coming on a back of a strong March. It was coming at a time when, in general, the trade uncertainties were there. Delay in decision making had become like a global and a local phenomenon. So these are very impressive set of numbers. Auto specifically, the base effect is kicking in, the slowdown, what the consumer is going through, I think that is a real deal. I'm surprised that why, of all the categories, Escorts is not showing good set of numbers. Maruti, I think they are getting the mojo back. Mahindra and Mahindra, it continues to shine up. And in the two-wheeler electric space, this entire, you keep on kicking the ball from one half to other half. So from Ola, it's been kicked to Bajaj, and from Bajaj has been kicked to TVS Motors. I think that's important. But one trend for me, which I think is a very visible trend, is that in the EV space, Ola is no longer the leader. I'm not getting into why, but I think you can firmly establish that Ola is now become a weak number 2, or perhaps is on course to become a decisive number 3, which is a big change coming in for Ola, because they had all the claims of what they were doing. So here again, the incumbents in this category have really made a comeback. I'm making this point.
If you like this video, then like, share and subscribe to ET Now.